session will give you an overview of what blockchain is, and it will help you clarify the myths about blockchain. मैंने सुना था ऐसा blockchain है, मैंने सुना था this is what is blockchain, ऐसा ही होता है. Let me try to clarify this, and probably towards the end I'll take Q&A so that we are able to have it a little interactive. Okay, so let's see what's going on in and around us. We live in a world which is called as the VUCA, a world which is filled with volatility. You don't know what's going to happen when, and luckily the theme of this organization as well fits in correctly. What's next? Correct? We don't know what's next. Volatile. It's uncertain. We just cannot predict in something. Just when we thought that COVID-19 has come down in a particular location, within a few days we see again the rise. It's fairly complex. Each person is giving his or her own solution. Somebody says have haldi milk, somebody says have this, somebody says have that, somebody says have garam pani. Correct? I mean, the list keeps on going. I am happily having my cup chai here, but we don't know what is the possible situations. And last is ambiguity, clarity in AI. Correct? It is like, the moment you qualified your CA or any course and you had to jump into so many options, you were totally lost. Or a person who was at the 10th standard who was still thinking of what his career options are. A lot of ambiguity, a lot of, multiple directions. And that exactly is the word which fits in today's situation. Taking this a little further, what are the business problems which you see? First and foremost, there is a huge element of trust deficit. And what's a trust deficit? A trust deficit is a simple thing where you are not willing to trust the other party. A statement made by the other party, you are not willing to trust it. A report which comes from the other party, we don't have to. There's an element of skepticism. And that is why there are a lot of intermediaries who come forward and who's given this entire bridge this gap. An example could be an auditor. An auditor bridges the gap and he ensures that the financial statements are reasonably true and fair. That's what we say. Correct? Look on the other side. There are a lot of fake products flooded in the market. There are a lot of fake news in the market. A lot of fake things. Something called as a deep fake. Using artificial intelligence, fake videos are coming up. So a lot of things like this. The third is anonymity. Somebody sends a message, but you're not able to trace who and where that message came from. Bigger challenge. The fourth is access to quality capital. Because of all these things, the capital which I'm able to raise for my business, I'm not able to prove that my business is actually real worth. And somebody fictitious or fake is coming up. And then my supply chain is not very agile. It is, you have to build up that resiliency. So those are challenges. And last but not the least, there is a need for constant reconciliation. A classical example of reconciliation is GSTR 2A. We have got fed up of that reconciliation. First, we have to reconcile our books with GSTR 2A, then you have to reconcile vendor with GSTR 2A, GSTR 3B with GSTR 2A, then GSTR 9 with GSTR 2A. I don't know, whatever number is there. Of course, I'm not a GST expert, but these are at least the forms and numbers which I'm aware of. So one can imagine kitna complication there. So many reconciliations which has to be done. Given these scenarios, do I have a solution? Do I have some sort of a possible method which can give me some idea about it? Let's look into a little into business problems. What we discussed was generic problems. Let's look into certain specific business problems. Let's say, for example, a typical business cycle. You have a supplier. The supplier gives something to the company. The company in turn renders it to the customer. Now, whatever is given between the supplier and customer, invariably those documents have to indirectly go to the bank. For your supplier-based financing or a customer-based financing, you have various methods. Then, of course, you have stock. That stock is insured by an insurer. And all of these are verified by an auditor. And each of these 5 parties, ignoring the auditor, maintains their own set of accounts and transactions, their own set of transactions, their own set of records, their own set of books. And on the other end, an auditor is expected to sort of sit and reconcile of this. I'm speaking from an auditor angle so that you're able to get the actual picture. So each entity maintains its own set of accounts. There is no single version of truth. Reconciliations have become a problem, inefficient, expensive rather, and vulnerable to any sort of a iteration. I have some data with me. That data I can modify it without your authorization, and I can say, boss, this is the truth. So these are challenges which we are facing in today's world, and this is the context where blockchain perfectly fits in. I've not yet explained what blockchain is. I'm directly coming from the angle where you can use blockchain for a simple reason. Unless you understand the use of blockchain, the importance of blockchain, you'll not be able to appreciate it. Because very important, it is not that after this 5-day web series, chalo, मैं परसों से या फिर Friday से blockchain setup कर देता. It is not as simple. There is a purpose, there is a use case, there is a larger planning and implementation involved. And that is what we are trying to tap in this particular session. So let me hit the bullseye. What is blockchain? Blockchain का मतलब क्या है? If I have to put it in technical parlance or in a jovial manner, this image talks about lot of pictures, pages, everything, etc., etc. It looks like a typical Gajini movie screen. Of course, the person over here is not bald. Or it looks like some movie screen where everything is written and you try to identify some hypothesis. And unfortunately, that is how easy to explain what is blockchain. Now, jokes apart, let me come into the main context. Ignore what is the content in this particular screen. Let me give you a very, very naive example. And I'm known for giving unconventional examples. If you've heard any of my sessions across the globe, wherever I've spoken, I would have spoken about technology in the most unconventional manner. Let's take an example of blockchain with the help of a trip which you and your friends way back in college went. Okay, so you and your friends, 4 of you guys, you went in for a trip, and that's normally happens with me as well. We have a close 5-member gang. We went for a trip, and simply say, we went for a movie, a picnic, a dance party, whatever. So we said, hey, you know what? Let each of them incur a particular expenditure. So my friend one incurs popcorn, one more incurs movie ticket, another incurs cab fare, another incurs Pepsi. We each of this incur. When each of this incur, then what do? We say, okay, fine, boss, I incurred so much, add up all of them, divide it by 5, identify what is the ratio, correct? And then split it, receive or give. That is a general thing which we do. Manlo or think that this is for a 5 days. Now you might have incurred something, you may have forgotten it. Somebody else incurred something, he might have forgotten it. So to avoid all this confusion, you come up with a simple thing. Boss, let's do one thing. Let us simply mention in a sheet of paper. And we know sheet of paper, we will lose track. And so we said, let us mention in a mobile phone. So you create on Google spreadsheet, sub log upload kar. What you do over here is, the moment you enter a particular number, all the other 4 fellows should say okay. Only if all the 4 fellows have said okay, that amount is an approved amount. Why? Because what if you spend some money out of your own? I mean, jovially I'm explaining, get the context. What if you ate an ice cream of your own without giving to all these fellows? Or what if you ate, let us say, a pani puri or a masal puri or a biryani? I'm a vegetarian, so for me it's vegetarian biryani. So what if you ate that without giving these 4 and they say, boss, we don't want to share it with you? Jokes apart, but get the context right. So every spend which you make, approval of each of the 4 fellows is taken. Okay, you got the context. So what is the first thing? First thing is you are incurring some money, and likewise each of them are incurring money. And when each of them are incurring money, you write down in a sheet of paper. And that sheet of paper, my dear friends, since I don't want it in a sheet of paper, I make it digitally, Google spreadsheet. All of them update, this particular amount is updated, and everybody says okay, okay, they put one tick mark. So you have given one username, password for each of them because it's a Google spreadsheet. Now the same thing you do for 5 days. At the end of 5th day, do you think you guys will sit and dispute, boss, itna hua, itna hua? The answer is no, because you yourself have approved it. And if you had any doubt, you would have immediately raised a flag. So which means there are multiple parties involved. Point number 1. Point number 2, each of the party is sort of authenticating the transaction. And when each of the person is authenticating the transaction, my dear friends, there is a sort of a consensus, a very important word when it comes to blockchain. consensus. So when a transaction is taking place, the parties, in this case 4 of my friends, are agreeing to it, and once it is agreed, let us say it is stored permanently. This is the crudest form of blockchain. If I have to put in a layer of technology over here, let me explain this. The 4 parties, we call them as 4 different fellows or 4 different nodes. And every time I do a transaction, my transaction, a copy of which is recorded in each 4 of them. And when will it get recorded? Only after all 4 of them approve, the transaction get recorded. It's something like a broadcast. What you do in WhatsApp, right? You have a concept of broadcast. So the moment you send a transaction, all the 4 of them approve, then the transaction is saved in each of their database, such that it is written only once, it can never be modified. In other words, we say it is encrypted, cryptographically altered, to ensure that nobody can alter that information. And even if you're altering the information, you can catch hold of it. Why? Because the next time you're starting a transaction, first it will check whether the previous data is valid. Uske baad the next transaction will get added. In other words, it is a digitized ledger. Each of the participant in the node has the access to that ledger, and the transaction goes into that ledger only after an authentication or after a approval, which is called as consensus. And since each party has to give the consensus in this context, we know it is foolproof, or in other words, it is highly trustworthy. And every time this transaction is validated, a block is generated. What is a block? We'll come to it in the next few slides. This block is added into the chain of blocks and therefore blockchain. In other words, my dear friends, it is a digitized public ledger of all the transactions, which is broadcasted in a peer-to-peer network, which is my friends, and these fellows have to verify it or authenticate it or give the consensus, and that block gets added to the series of blocks which I have, and the transaction is said to have completed. I know you have so many questions. Hang on, few of them will address them one at a time. And this is the underlying concept which was used for Bitcoin. Now comes a very interesting question, sir. If every transaction everybody has to authenticate, don't you think there are challenges? We'll come to it, one of them. These 4 in my case were friends. When it comes to the actual business reality, these 4 fellows will be 4 different players. One could be bank, one could be, let us say, RBI, or RBI set up their own entity called as NPCI. I'm not too sure legally whether it's an entity of RBI, but NPCI is a separate institution. NPCI ensures all the clearing of the banking, check, NEFT, RTGS, UPI is done. So NPCI could be a party. Other banks could be a party. Foreign SWIFT network could be a party. Now these are the players which will ensure that as and when transaction happens, real time the recording goes into the system. So that's basically what a blockchain is. Now comes the interesting question, sir, what is this block? This block, what is that? We'll look into the subsequent slides. How does it work? First and foremost, it is a distributed ledger. I told you there are a series of ledgers, such that what happens in this distributed ledger? What is there in the block? It has 3 major things. It has data, it has hash, and very important, it has the hash of the previous block. Let me repeat it. It has the data, What is the data? Let's presume 500,000 rupees, whatever I've transacted. It has the hash. What is hash? This is nothing but cryptography. Now, let me put it in simple language. Way back in school, if you had to send one message to your friend who was there 2 seats away from you, but the other 2 friends in between you and your friend that side should not read that message. So you developed your own mechanism. You could, a simple method could be, you wrote all the alphabets, and every alphabet you gave a notation of 1, 2, 3 numerical. So 26 means Z, 5 means E. So you made one list lines and you sent one number that the other person received it and sort of reverse engineer got the text. This is encryption. Encryption is a mechanism where the basic text called as plain text is converted to an encrypted manner such that from the encrypted value you cannot reverse engineer and get the information. It is quite complicated. So what happens is, whatever you have the data, it is sort of hashed, and only with the help of a private key you can view it. Correct? So that's basic. Only with the help of a public key you can view it, and that will ensure that the data is data integrity is taken care. So you have the data. Let's, in simple language, think that this is password protected, or put a lock over this, and nobody can sort of open that other than the intended party. So that's basically hashing for you. And in addition to the hash, it will also have the previous hash. Now, why is previous hash necessary? Previous hash is necessary because you need to ensure that you are adding the data or the block which is successive to the previous block. If it is not done, it doesn't serve the purpose. Correct? So therefore, adding the hash and the previous hash and the hash are very critical things. So how does this data look like? It could be a transaction. In a case of a Bitcoin, or in case of monetary transfer, Mr. A transferred to B, or this image what you see in WhatsApp, I just that icon, that is basically one person transfers to another person. Now, what is the hash? Hash is that value which you see on the screen, where you find a number or one numeric alphanumeric character. One could assume it like as unique as a fingerprint. And you have the previous hash. And very important, you change any small portion of this data, the hash value will automatically change. So every data will have a unique hash. And there are a lot of encryption algorithms involved over here. Your 256 encryption, your 512 encryption, your 128, MD5, a lot of these encryption algorithms, we need not worry too much about it. Let us simply understand a mechanism through which you convert the data. And this block gets added into a series of these things. So take this example further. How do I say it is secure? Very simple. This is how the blocks are constructed, and the first block is called as the Genesis block, and that is where the source or the actual data resides. And every hash, there is something called as a cross reference to the previous hash, except for the first block, which is called as the Genesis block, and rest all have the cross referencing. Taking this further, the peer-to-peer network, I told you these are 5 friends or 4 friends, whoever you can call it. Every time a transaction takes place, each of them have a copy of the ledger. And once a transaction is come into picture, a consensus is done, all 4 of them or 5 of them or 6 of them, whoever they are, the block gets added into it. And that's the only way consensus can actually be reached. So once consensus is done, the block gets added. Okay, so that's in a simple language what blockchain is. Now you can, I'll take this further, look into deliberations, use cases, so that you're able to understand. The first 2 days have been designed in such a way that you understand the basics, and trust me, this is one technology, by sitting one session you will never be able to understand. And it's highly recommended that you don't do any Google search after my session. For a simple reason, the thought process which the speaker or the author of the blog will give you will be totally different. What my suggestion is, hang on for these 5 days, stick on to your seats, okay? And I'm ensuring, Abhishek, that the audience also ensures all the 5 sessions. Jokes apart, but coming back, I am telling you, my dear friends, if you get the fundamental concept, there is a long way to go ahead. it you will understand it block by block only then आपका पूरा blockchain का picture आ जाएगा. Okay, now this is basically what a cryptography is, which is basically whatever that information 38 GB whatever is that. Then you have what is called as the previous block, you have what is called as the timestamp, and you have the transaction. So these are basic things which is there in every block, and they have a cross referring to the previous block. Okay, let's look into this from an example. What is hashing? Sorry, just a minute. I hope my screen is visible. Let's quickly look into the example so that you're able to get the context. Example, let us say the word or the data was dosa. I'm sure all of us love that delicacy, and it's a favorite for most of us. Now, if you see a dosa, the encrypted word dosa looks like this, and this is I think 128 encryption I think I applied, which is an open source which is available. Now the same dosa, what I do, I did not like that capital D on the dosa, I made a small d dosa. Just look into that small d dosa, what happens? Can you see the difference? Can you see the huge change which is there? There is no way the first and the second is compatible. Just for a uppercase to a lowercase, even if a space is given, the hash value is different. And that is the reason why we say blockchain is fairly secure. Why use the word fairly? Nothing is 100% secure, we all know that, but it is fairly way secure compared to this. Let me add some masala to it. And what do we get when you add masala to the dosa? We get masala dosa. So in the case of a masala dosa, what happens? Look at the hash key. So I hope you're able to get an idea what exactly is hashing all about,
sir,
and how the data is fairly secure.
Sir.
Yes, please.
Sir, your screen is not visible. Can you share again? Yeah. Yes, sir.
Perfect.
Right now visible.
Yeah. So I'm sorry. Apologies for the confusion. This is what I was trying to showcase. We're looking into dosa versus a dosa with a lowercase d, and the same concept with a masala dosa, which you can see that the hash key is different for each and every one of them. Correct? So that's how unique hash values are, my dear friends. It's totally unique. It's totally unique. And for every space, every alphanumeric, every information, this is going to sort of change. So I hope you're reasonably clear what is the use case or what is the mechanism of hashing which is being deployed. So taking this conversation a little further. So a typical blockchain is a series of blocks added to the chain, and every block has bare minimum information, that is data. It has the hashed value, it has the previous hash, and very important, all of these are secure because they're all encrypted. Can I have more information into it? Yes. You also have timestamp, you also have certain other information. Now what extent data has to come into the block, you have to decide over a point in time. Okay, so everything cannot be pushed into the block. That's a very important lesson which you'll have to pick up from. So block contains, it has index, which is basically a position of the block in the chain. Let's say index 45, 85, whatever. Timestamp, whenever the block was created. Hash, which we spoke about, previous hash. It has obviously the data, and it has a nonce. Nonce is applicable only in case of a Bitcoin network. Other places it is not applicable. So ignore nonce for the time being. Rest all are the basic contexts. Now comes a very interesting question. Okay, I understood all these concepts, etc. Is blockchain and Bitcoin the same? Let me clarify this fundamental question. A blockchain can exist even without Bitcoin. In other words, do not think that blockchain hi Bitcoin hai, Bitcoin hi blockchain. As much as you say internet is to email, blockchain is to Bitcoin. I repeat, Internet is to email, blockchain is to Bitcoin. मतलब इंटरनेट का एक एप्लीकेशन ईमेल है, ब्लॉकचेन का एक एप्लीकेशन बिटकॉइन. But since the prominence of Bitcoin became so very huge and people were earning money, whatever, many people thought Bitcoin is blockchain. And that is why, unfortunately, even the Indian government initial days, they had mentioned that, the approach was no blockchain. Then they clarified that we are okay with blockchain, we are not okay with Bitcoin. Of course, now there has been a lot of legal updates which has taken place. I am not going to go into that much in depth, but I hope you got a clarity. So in summary, my dear friends, blockchain is a larger technology where Bitcoin is one of a use case of blockchain. Okay. Now this blockchain has got 5 essential elements, and this is very critical for you to understand. Element number 1 is cryptography. Element number 1 is cryptography, which I told you, that is the underlying statement or truth of what blockchain is all about. It uses a variety of cryptographic techniques. It uses hash functions. It uses something called Merkle tree, which is going to be discussed in next session, which is tomorrow's session. Public key infrastructure, private key pairs, a whole lot of these things constitute what is a blockchain, cryptography rather, sorry. Second, it works on a peer-to-peer network. What is the meaning of peer-to-peer? It works in a network where you and I are on par with each other. In other words, there is no centralized authority. Sab ek hi jan hai. In other words, it talks about democratization. Every person has equal power and equal rights. Peer-to-peer. Then comes a very important thing, consensus algorithm. The algorithm which is used to give the consensus and the confirmation. This is nothing but the protocol, who should give the acceptance, who should not give the acceptance, and a whole lot of these things. Then very important is the ledger. One could call it as the database. This is where all the transactions are recorded and they are cryptographically encrypted so that it is safe. And you have validity rules. I would say validity rules to some extent may probably be the consensus mechanism. So it's the set of rules, who can join, how the ledger can validate. These are all generic rules which will come into picture. Remember, everybody need not be a part of this setup. So I hope you got some elements of this blockchain setup. So let me give you example of how a Bitcoin setup works. Of course, you have the detailed discussion on the day 3. I will also give you how the setup can be used in an organization in India, assuming for his or her own purpose. Situation number 1. The Bitcoin setup works more or less like this, where there are various parties called as nodes, okay, or these nodes are also called as a miner, M-I-N-E-R, miner. Just like how we mine, only then we get gold. Similarly, these days are called miners. What happened was, initially, because I had to give the recognition to these people, I formed, let's say about 10 people came forward, somewhere remote corners of the world. So all these 10 people came forward and said, boss, we will mine it. And every time we mine, a copy of the transaction used to get stored in their system or their database. And over a point of time, their system became much more larger and larger because so many transactions came in. So assuming a transaction took place, these fellows had to validate. So you might be thinking, sir, what is the reward these days are going to get if they are validating? If they are mining the transaction, they used to get a Bitcoin. And that Bitcoin was a virtual cryptocurrency through which they could buy and sell anything. Now, as and when more number of players kept on coming into the system, the number of miners also became increasingly high. And in order to reward only the rightful miner, they had to bring in a lot of validation, consensus rules, mechanisms, etc. I'm not going to go into that much of depth. Now comes the interesting question, sir. if I assuming, ignoring the legal framework, whatever is that, if you or I have a Bitcoin, and let us say we purchase something from the market using that Bitcoin, am I the node or am I the person who's validating? The answer is no. Please be very clear. Initially, in my example, I told you we four are friends, and therefore every transaction each of them are doing. Now, when these four become four different players, let us say one is an insurance company, one is an RBI, one is NPCI, one more is, let us say, bank. Now, you issued a check. Will you validate the transaction? No. Your signature alone you will sign it and give. The bank or the various fellows will validate it and then they will do it. In other words, you are merely using the system. You are not a node in the entire blockchain setup. When do you become a node? When you mine the transactions, that time you become the node. In a layman's language, mining is the process of adding the block into the chain, therefore you get. In other words, we only want authorized people to add this thing. Sorry, there is some voice. Can we please mute? Thank you. So we want only authorized person to mine the transaction. As a result of it, only such authorized person will be the miner. In a case of a private, Abhishek, can you please mute the person? I'm not sure from where the sound is. Abhishek, sorry, can you please mute? I think there's some background noise. Hello. I think there's some issue there. We'll have that fixed, so the organizers will look into it. Sorry, let me come back to the point. Sorry, 1 minute. Okay, I hope you're able to see the screen. Let me quickly move further. I was talking about the mining. As I said, every person in the node need not mine the every person in the network, he may use that network for his or her benefit, but it is not necessarily that he will mine it in the transaction. For example, you use the NEFT RTGS setup, but are you validating the NEFT RTGS? No, your branch or your bank validates. So your bank or the branch will become the node which is validating the transaction in the blockchain, whereas you are only going to use it for your benefit, through which you are able to have faster settlement, faster or reduced banking transaction charges, etc. Okay, so that is something which you have to be very, very clear. Example number 2, let me talk from an enterprise blockchain perspective. Blockchain of course has public and private, and talk about an enterprise blockchain. Let us take an example. This is a popular example which I always give. Automobile dealer, Maruti Suzuki or Hyundai, whatever. Now they are having a various players within, or various dealers within their network. Now they bring all their dealers into the blockchain network because they want the intercompany reconciliation to be very, very quick. As a result of which they bring in this system. When they bring in this intercompany reconciliation has to be very quick and it should happen on real-time basis, or one branch to another branch, stock transfer, etc. They want only one single source of truth. Now a transaction where a vehicle is supplied by the manufacturer supplies, dealer A receives. So the consensus mechanism is only between these both. Other players need not do anything. Example 2. The dealer gives it to another dealer or sub dealer. In those cases, consensus mechanism is only between those both. Manufacturer need not do anything. In other words, it need not always be that every fellow within the player also has to authenticate it. In the case of a Bitcoin setup, it follows what is called as a proof of work concept, where 51% of the nodes should authenticate, only then the transaction gets added into the system. On the other end, in a case of a private blockchain, what can be done by organizations, any number of rules can be defined. For example, you can have a rule defined like special resolution, you can have a rule defined like ordinary resolution, you can have a rule defined which is totally extraordinary special resolution, whatever. Let's say 90% of the people have to agree, 95% of the people have to give consent. So all of those are possible, and that's the flexibility, and that's basically your consensus mechanism. Okay, so that's an overview of the components of blockchain. I know you may have some questions. I've kept a good amount of time towards the Q&A. We will address that towards the end. Okay, moving this a little further, this is what is called as the distributed ledger platform, to give you a perspective of how these things work. What you see on the extreme left is a centralized setup. What you see in the second is a decentralized setup. What you see in the extreme corner is a distributed setup. To give an example, assuming you're downloading something from ICAI Institute website, there's a centralized server where ICAI has all the information and you download it from it. Let's say you are downloading it from, or the way in which the SIRC, NIRC, WIRC are related. So these becomes a decentralized setup, and you have a distributed setup. A distributed setup is all the players together, all the players, and each fellow authenticates every transaction. So the more the distributed players, the more is the time. That is of course a limitation of blockchain, but let us ignore it. Let us understand the concepts involved over here. Now, will I have so many distributed players? In the case of a public blockchain, everybody can become a distributed player, but it is totally, everybody can become a node. So he can just add to this entire network and say, hey, I will authenticate it. But he requires some sort of an infrastructure and, a setup for that. Only if that is done, he will be able to add into this. Quickly moving on, what are the types of blockchain? Blockchain are broad, blockchain can be of two types. One is a public blockchain, one more is a private blockchain. A public blockchain is also popularly referred to as permissionless blockchain, whereas private blockchain is referred to as a permissioned blockchain. Matlab, only those fellows who have permission can join in. And here, this is normally regulated, whereas this is not regulated. So because it is not regulated, there is a problem. And that is why a Bitcoin setup, many of the countries are hesitant, because it may be used for a lot of anti-money laundering and a lot of things. Sorry, rather it is being used for money laundering, and it becomes difficult for anti-money laundering legislature to work. On the other end, you have the private blockchain, which is a permissioned blockchain. So user has to be permitted to come into this setup, and these guys will be the authentication agencies. So to give a difference, what is public versus private? A public is open to everybody. A private is closed or only authorized users. Public is anonymous or pseudonymous. What is anonymous? You don't know who's performed the transaction, or you know that transaction was performed by XYABLMG. Who is that XYABLMG? You will not be able to identify. Okay. Whereas in the case of private, you can do a sort of a KYC and then push them into it. Access to network, permission less. That means you don't require permission. Anybody can come in as long as you have the required setup. As private, you require the permission. Public, because anybody can join, obviously it is open source. Whereas private, it is normally closed and only certain proprietary elements are in it. Trust, a public blockchain, trust compared to that of a private blockchain, I would say is lesser, whereas a private blockchain is fairly more trusted. There are some people who also argue other way around. Let us ignore this particular thing because there's a very, very debatable point for the time being. How do I append something to the blockchain? We have a concept called proof of work and proof of stake, whereas in private it is a proof of authority. To put it in simple language, I gave you a Bitcoin setup where majority of the players give an consensus or they give an agreement, so the transaction gets added. Correct? So proof of work. Proof of stake, again, there are a lot of consensus mechanisms. Let's not go too much into the depth of it because we are understanding the basics. A few examples for public blockchain: Bitcoin and Ethereum. Private blockchain, Ripple, Hyperledger, these are popular examples. And authority or ownership, in case of public, nobody owns it. In case of private, either a company, a corporate, or a consortium owns it. Minors can be anybody in public, whereas in private, only approved parties can do it. Now, why am I making a mention of all of this? Frankly speaking, tomorrow as chartered accountants, finance professionals, commerce professionals, whatever stream you are, public blockchain may be an area which you can look into. Okay, that's your personal interest. Private blockchain is where you can do a whole lot of these things. And in fact, this you will understand, because when I come back on day 4, I'll be speaking about use cases. There I'll make a mention of how private blockchain can be deployed, and you will get the practical perspective of it. And I just gave you one example of it, hundreds of examples I can give, but I'm restricting myself to the introductory concepts. So these are the types of blockchain. Public permissionless. Public permission is just a variant of it, and you have private permission. So in the last two, the first and the last is what I explained to you. Stick on to that. Public permission is a small variant where only authorized person can log into, but it still remains in the public setup. So the speed of transactions is obviously highest when it comes to private permission, whereas decentralization and transparency is highest when it comes to public permissions. So Bitcoin could probably come here. Ethereum setup to some extent can come here. A private permission would be what is applicable here. Okay. The next is a very, very interesting terminology. I know it's a little heavy, the concepts, but that's how it is, correct? So I'm just giving you a gist of it. More details I'll be happy to take it in the Q&A session. Let's quickly spend a minute or two to understand the concept of smart contract, a very important concept. A smart contract is one excellent use case of blockchain. This just came up in the last few years, and let's see what happens. As the name itself suggests, the contract is smart. The contract is smart, meaning it is like a self-executable contract. One can understand this as a .exe file. What does a .exe file do? You double click, pura installation kar de. The same way, a smart contract is written in such a way the rules of the contract execute automatically by itself on a trigger being given to it. Example, imagine you completed the audit, signed the audit report, and gave your invoice. The client accepted the invoice, all digitally, okay? 30 days from the date client accepted the invoice, the money came into your bank account. 30 days from the date client accepted, same year only, not in different years. The money came into your bank account. Don't you think it's a wonderful mechanism? That's exactly what smart contract does. A smart contract is built in such a way, on a particular trigger happening, the series of transactions will take place such that the end result, what the contract is given, is executed. And this is an intelligent contract. Now one must say that how do I believe or trust this contract? Because it is in the blockchain. I've codified it. I have given my acceptance, you have given my acceptance, we are going to execute it. A classical example of smart contract, let me tell you, so that you'll be able to understand this better before we go into the fine print, or rather I will go to the fine print. Let's look into the example a little later. So what does a smart contract do? A smart contract is created between two or more parties. Both the parties remain anonymous. You do not know who the parties are. To some extent it remains anonymous. The contract is stored on a public ledger, so that everybody has access to it. There is some sort of a triggering event, some sort of a deadline which is there, and the contract self executes as per the written instructions, and regulators can sort of use this to analyze the various activities, predict uncertainties, and a whole lot of these things are possible. Let me give you one example so that you'll be able to understand this. Imagine there is a drought in a region, drought, famine, no rainfall, all these things. As a result, what happens? The first person to get affected amongst the various people is agriculture. And we know that agriculture is normally having something called as a crop insurance. Now, unless the government declares it as a famine crop insurance, people will not make the payment. Now, government has to declare, farmers has to take that copy, run to the insurance company, run pillar to post, only then they get the compensation. Why not a setup where the moment the government triggers that it is a famine, automatically a message goes to the insurance company setup, through which immediately the funds get paid out to all those farmers. Look at the beautiful setup. And that is basically what smart contract is for. I can give hundreds of examples, but I'm just sticking on to one so that you get the concept into it. Okay, so what is the concept, underlying concept here? The concept is that on a particular event trigger, subsequent events automatically get triggered. Subsequent events automatically get triggered, and that is the beauty of a smart contract. In fact, the smart contract has got so many number of use cases. That is what gave life to blockchain when it comes to the Bitcoin setup. And if at all an organization uses any sort of a blockchain setup, smart contracts is a compulsory addition into your environment. Okay, so where can I use them? You can use it for storing records. You can use it for trading activities. You can use it for supply chain. You can use it for mortgage, basically home loans or property-backed loans, real estate market, employment arrangements, copyright protection. Let's take an example. You were an artist. You came up with a music, or you came up with a story. You came up with a book. You upload it into one web page. The moment somebody sees that, the moment somebody says, sab kuch theek hai, confirm. The moment he makes the payment to you, automatically royalty is split. 70% comes to you as author, 30% goes to the fellow who's hosting it. Flick of a button, instant. So all these things are protected. Okay? Healthcare services, voting can be possible, insurance claim, IoT, lot of use cases are there. Of course, I cannot cover everything in one session. Session by session we'll look into it, but that's to give you a perspective about smart contracts. So what can the entire blockchain setup solve? Okay, that is something which I would want to sort of give that as a pointer for you to think what it can solve. That is a very important thing. It can sort of what are you trying to do? You are trying to record something, blockchain can help you. You are trying to track something, blockchain can help you. You are trying to verify something, blockchain can help you. You are trying to aggregate something, blockchain can help you. What value do you want it to capture? Information, attribute, responsibility, access, permission, right, voting, ownership, reputation, trust. And for whom? It could be for your customers, it could be for your employees, it could be for your suppliers, producers, creditors, government, citizens, and the whole list can keep on increasing. In fact, my dear friends, you will appreciate this, that this is being seriously considered, the blockchain setup is being seriously considered for digitizing the land records, because the biggest problem in today's land records is who owns the land. There are so much of disputes in that itself. Now the moment it is put into the blockchain setup, it becomes a foolproof. But then comes the interesting question, sir, how do I put land into blockchain? Land is a physical asset, blockchain is a technology. This is where a physical asset gets converted into a digital asset, and this is called as tokenization. This, by way of a tokenization, a land gets subdivided into multiple portions. Let us presume the smallest portion is put into the asset or is put into the registry. Okay, 1 acre for agricultural land, or half acre, or gunta, whatever you can call it. When it comes to city, 30 by 40, 20 by 20, whatever is this piece of land you have identified it, that becomes the smallest token. That token you can say is owned by so and so person. And one unique advantage, you might be thinking, sir, India mein blockchain kahan par hai? There are so many companies who are doing it. There are so many setups which are coming. You will be surprised. Jio is coming up with their own blockchain setup. What it can do is secondary. They're coming up with it. TCS is coming with something which can probably solve the puzzle. Amazon has its own blockchain setup. And in fact, today blockchain has become such a large this thing is a new type of a service called blockchain as a service is coming up. Matlab, Somebody else has developed the technology, you just use it for your particular operations, you just use it for your industry, etc. E-commerce, if they use blockchain, the entire concept of reconciliation can be immediate and instant. So like that, a lot of use cases are there, and that's basically, my dear friends, an introduction to blockchain for you. I know I kept it very, very crisp. Lot of topics or wordings were covered, but yes, if I go too much into depth on day one, it will become too much for you to digest. And I'll be happy to answer your Q&A. Before we go into that, a quick summary. Blockchain will fundamentally replace the way domains, industries, and business are managed. Supply chain, which is fairly complex, requires more and more decades of transformation, whereas this is going to be transformed easily with the help of blockchain. Accounting needs more development to realize the potential, and this is going to happen over a point in time. But the number of cases which I discussed, my dear friends, is just a sample, is just a finite. But the larger use cases are something which people are still exploring. Okay, on this context, I will pause it. If there are any questions, I'll be happy to take. I understand a few questions have already come up. Let me address them in a simple, lucid manner so that you're able to get the context. Otherwise, these are my contact coordinates. Feel free to reach out. And my session on enterprise blockchain is a separate course which I've designed. It's a course which is available in apnacourse.com. Should you wish to, please feel to go and visit it.